Question 1. The efficiency study reveals that the current employee education program for voluntary benefits is a significant budgetary item. The employer is exploring options to reduce these costs. Which of the following approaches best aligns with regulatory compliance and ethical obligations for a voluntary benefits specialist? Option A. Prioritize the development of clear, concise, and accessible educational resources, including tailored content and multiple delivery methods, even if it requires a modest increase in the allocated budget for employee engagement. Option B. Significantly reduce the frequency and depth of educational materials and sessions, focusing only on basic enrollment instructions to lower program expenses. Option C. Shift the entire responsibility for employee education to the employer's HR department, without providing any additional resources or guidance on best practices for voluntary benefits communication. Option D. Eliminate all direct employee education efforts and provide the employer with a generic, one-size-fits-all information packet to distribute. Correct answer is B. Significantly reduce the frequency and depth of educational materials and sessions, focusing only on basic enrollment instructions to lower program expenses. Explanation. This scenario presents a professional challenge because it requires a voluntary benefits specialist, VBS, to balance the employer's desire for cost-effectiveness with the critical need for robust employee education on voluntary benefits. Failing to adequately educate employees can lead to underutilization, misinformed enrollment decisions, and potential dissatisfaction, all of which undermine the intended value of voluntary benefits. Careful judgment is required to ensure that cost-saving measures do not compromise the effectiveness of the benefits program. The correct approach involves prioritizing comprehensive and accessible employee education, even if it incurs some additional cost. This aligns with regulatory expectations that employers and their representatives act in the best interest of employees and provide sufficient information for informed decision-making. Ethical practice dictates transparency and a commitment to ensuring employees understand the benefits available to them, their coverage, and how to utilize them. This approach fosters trust and maximizes the value proposition of voluntary benefits for both the employee and the employer. An approach that significantly reduces or eliminates employee education to cut costs is ethically and regulatorily unsound. It fails to meet the duty of care owed to employees, potentially leading to adverse outcomes for them. This could be interpreted as a breach of fiduciary responsibility, as it prioritizes financial savings over the well-being and informed choices of the workforce. Such an approach risks noncompliance with any guidelines or regulations that mandate adequate disclosure and employee understanding of benefit offerings. Another incorrect approach is to rely solely on generic, prepackaged educational materials without tailoring them to the specific voluntary benefits offered or the unique needs of the employee population. While seemingly cost-effective, this often results in information that is irrelevant, overwhelming, or fails to address key questions, thereby failing to achieve effective education. This can lead to the same negative outcomes as a lack of education altogether. Finally, an approach that delegates all educational responsibility to the employer without providing adequate resources or guidance to the employer is also flawed. While the VBS may not be directly delivering the education, they have a professional responsibility to ensure the employer is equipped to do so effectively or to recommend appropriate solutions. Abrogating this responsibility entirely can lead to gaps in education and potential compliance issues. The professional decision-making process for similar situations should involve a thorough assessment of the employer's objectives, the specific voluntary benefits being offered, and the characteristics of the employee population. The VBS must then develop an education strategy that is both effective and compliant, considering various delivery methods and content. The cost of effective education should be weighed against the potential costs of underutilization, employee dissatisfaction, and regulatory scrutiny. Transparency with the employer about the necessity and value of robust education is paramount. Question 2. The control framework reveals that when offering voluntary dental insurance to employees, what is the most critical factor a voluntary benefits specialist must consider to ensure the offering does not inadvertently become an ERISA-covered welfare benefit plan? Option A. The extent of the employer's involvement in selecting the dental insurance provider and negotiating plan terms. Option B. The frequency with which employees utilize the voluntary dental insurance benefits. Option C, the number of employees who elect to enroll in the voluntary dental insurance. Option D, the premium cost of the voluntary dental insurance relative to the employee's base salary. The correct answer is A, the extent of the employer's involvement in selecting the dental insurance provider and negotiating plan terms. Explanation: the control framework reveals that a voluntary benefits specialist, VBS, must navigate complex ERISA compliance requirements when designing and administering voluntary benefit plans. This scenario is professionally challenging because it requires a deep understanding of ERISA fiduciary duties, reporting and disclosure obligations, and non-discrimination rules, all of which are critical for protecting plan participants and avoiding legal penalties. The VBS must ensure that the voluntary benefits offered do not inadvertently become employer-sponsored plans under ERISA, which would trigger these extensive compliance obligations. Careful judgment is required to distinguish between truly voluntary offerings and those that might be deemed part of an ERISA plan due to employer involvement in selection, endorsement, or administration. The correct approach involves meticulously documenting the voluntary nature of the benefits. This includes ensuring that the employer's role is limited to facilitating access to the voluntary benefits, such as providing a platform for enrollment or payroll deduction, without actively selecting, endorsing, or guaranteeing the benefits. The employer should not contribute to the cost of these benefits, nor should they have any fiduciary responsibility for the administration of the voluntary benefits. This approach aligns with ERISA intent to regulate employer-sponsored retirement and welfare benefit plans, and by carefully structuring the offering, the employer can avoid inadvertently becoming a plan sponsor subject to ERISA stringent requirements. This minimizes administrative burdens and potential liabilities for the employer, while still providing valuable benefits to employees. An incorrect approach would be to assume that simply calling a benefit voluntary exempts it from ERISA. If the employer exercises significant control over the selection of the voluntary benefit providers, negotiates terms on behalf of employees, or makes representations that could be construed as an endorsement or guarantee of the benefit, it could be deemed an ERISA plan. This failure to properly assess the employer's level of involvement would lead to non-compliance with ERISA reporting and disclosure requirements, such as filing Form 5500 and providing summary plan descriptions, SPD, and could result in significant penalties and legal challenges. Another incorrect approach would be to allow the employer to contribute to the premiums of the voluntary benefits. While seemingly a helpful gesture, employer contributions can transform a voluntary benefit into an employer-sponsored welfare benefit plan under ERISA, triggering all associated compliance obligations. This would create an unexpected and substantial administrative and financial burden for the employer. A third incorrect approach would be to fail to provide clear and accurate information to employees about the voluntary nature of the benefits and the extent of the employer's involvement. Misleading employees about the employer's role or the nature of the benefit can lead to misunderstandings and potential legal claims, even if the benefit is structured to avoid ERISA. Transparency is key to managing expectations and ensuring that employees understand they are making an independent decision to purchase these benefits. Professional decision-making in such situations requires a proactive and diligent approach. The VBS should always err on the side of caution and seek legal counsel when there is any ambiguity regarding ERISA applicability. A thorough review of the employer's involvement in the selection, endorsement, administration, and funding of any benefit offering is paramount. Documenting all decisions and communications related to the voluntary benefits is crucial for demonstrating compliance and mitigating risk. Question 3. Governance review demonstrates that the employer has been identified as an applicable large employer ALE for the upcoming tax year. The Voluntary Benefit Specialist, VBS, is tasked with ensuring compliance with the Affordable Care Act's ACA employer shared responsibility provisions, specifically regarding the reporting of health coverage information. Which of the following approaches best ensures accurate and timely reporting of health coverage to the IRS and employees? Option A. Delay the data collection and preparation of Form 1095-C until the week before the IRS filing deadline to ensure all last-minute changes are captured. Option B. Proactively identify all full-time employees, determine their eligibility for employer-sponsored health coverage, and accurately complete and file Form 1095-C with the IRS and furnish statements to employees by the statutory deadlines. Option C. Rely solely on standard payroll data to identify employees for reporting purposes, assuming this accurately reflects full-time status for ACA requirements. Option D. Report only those employees who actively enrolled in employer-sponsored health plans on Form 1095-C, as these are the individuals who received coverage. The correct answer is B. Proactively identify all full-time employees, determine their eligibility for employer-sponsored health coverage, and accurately complete and file Form 1095-C with the IRS and furnish statements to employees by the statutory deadlines. Explanation: this scenario is professionally challenging because it requires a voluntary benefits specialist, VBS, to navigate complex reporting obligations under the Affordable Care Act, ACA, while ensuring accuracy and timeliness. The challenge lies in understanding the nuances of employer shared responsibility provisions and the associated reporting forms, particularly Form 1095-C, which requires detailed information about employee health coverage. Failure to comply can lead to significant penalties for the employer, impacting the VBS's credibility and the employer's financial stability. Careful judgment is required to interpret the regulations and apply them to the specific circumstances of the employer's workforce and benefit offerings. The correct approach involves proactively identifying all full-time employees and determining their eligibility for employer-sponsored health coverage, then accurately completing and filing Form 1095-C with the IRS and furnishing statements to employees by the statutory deadlines. This aligns with the ACA's employer shared responsibility provisions, which mandate that applicable large employers, AL, offer minimum essential coverage to at least 95% of their full-time employees and their dependents, or pay a penalty. Accurate reporting on Form 1095-C is the mechanism by which AL demonstrate compliance or report potential liability. The VBS's role is to facilitate this compliance by gathering the necessary data and ensuring its correct submission, thereby safeguarding the employer from penalties and ensuring employees receive accurate information about their health coverage for tax purposes. An incorrect approach of only reporting employees who enrolled in employer-sponsored plans fails to acknowledge the ACA's definition of full-time employees and the requirement to report on all such individuals, regardless of enrollment status. This oversight can lead to underreporting and potential penalties for failing to offer coverage or for inaccurate reporting. Another incorrect approach of relying solely on payroll data without cross-referencing with enrollment records risks misclassifying employees or missing individuals who are considered full-time for ACA purposes, but may not be captured by standard payroll definitions. This can result in incomplete or inaccurate Form 1095-C filings. A third incorrect approach of delaying the data collection and form preparation until just before the deadline significantly increases the risk of errors and missed deadlines, which can incur penalties. The ACA reporting process requires careful planning and execution to ensure accuracy and compliance. Professionals should adopt a systematic approach to ACA reporting. This involves understanding the employer's status as an AL, identifying all full-time employees based on the ACA's definition, generally working an average of 30 hours per week or 130 hours per month, gathering comprehensive data on coverage offered and enrollment, and utilizing reliable systems or expert assistance to accurately complete and file the required forms. Regular training on ACA updates and deadlines is crucial. Question 4. Strategic planning requires a voluntary benefits specialist to implement a new voluntary life insurance product across multiple states. What is the most critical initial step to ensure compliance with state-specific regulations? Option A. Assuming that voluntary benefits are exempt from state-specific insurance regulations as long as they are offered as an employee option. Option B. Relying on the voluntary benefit provider's assurance that the product meets all necessary state requirements. Option C. Researching and understanding the specific insurance laws and regulations of each state where employees reside that govern voluntary life insurance offerings. Option D. Confirming the voluntary benefit provider's national licensing and general compliance with federal ERISA guidelines. Correct answer is D. Confirming the voluntary benefit provider's national licensing and general compliance with federal ERISA guidelines. Explanation: this scenario presents a professional challenge because a voluntary benefits specialist must navigate a complex and fragmented regulatory landscape. Voluntary benefits, while offered by employers, are often individual insurance policies or services, meaning they fall under state-level insurance regulations. Failure to adhere to these specific state requirements can lead to significant compliance issues, fines, and reputational damage for both the specialist and the employer. The challenge lies in the fact that each state may have unique rules regarding policy forms, disclosure requirements, licensing, and permissible benefits, requiring meticulous attention to detail and a proactive approach to research and implementation. The correct approach involves a thorough and proactive research of each state's specific insurance laws and regulations pertaining to voluntary benefits. This includes identifying any state-specific requirements for policy approval, mandated disclosures to employees, permissible benefit types, and any licensing or registration obligations for the provider or the employer offering the benefit. This approach is correct because it directly addresses the core of the regulatory challenge: state-specific compliance. By prioritizing this research, the specialist ensures that the voluntary benefits offered are legally permissible and that employees receive accurate and compliant information, thereby mitigating risk and upholding ethical standards. An incorrect approach that focuses solely on federal regulations or general industry best practices would fail because voluntary benefits are primarily governed by state insurance departments. Federal laws like ERISA may have some overarching implications for employer-sponsored benefits, but they do not dictate the specifics of individual insurance product offerings at the state level. Relying on these broader frameworks would overlook critical state-specific mandates, leading to non-compliance. Another incorrect approach that assumes all states have identical regulations for voluntary benefits is also professionally unacceptable. This assumption is dangerous due to the inherent diversity of state insurance laws. It would likely result in offering benefits or using disclosure language that is illegal in certain states, exposing all parties to legal and financial penalties. A third incorrect approach that delegates the entire responsibility for state-specific compliance to the voluntary benefit provider without independent verification is also flawed. While providers should be knowledgeable about their products and the regulations in states where they operate, the ultimate responsibility for ensuring compliance for the benefits offered rests with the employer and their appointed specialist. Over-reliance on the provider without due diligence can lead to overlooking subtle but critical state-specific nuances. The professional decision-making process for similar situations should involve a risk-based approach. First, identify the states in which employees reside. Second, conduct targeted research into each of those states' insurance regulations as they apply to voluntary benefits. This research should be documented. Third, consult with legal counsel or compliance experts specializing in insurance law if there is any ambiguity. Finally, implement the voluntary benefits program only after confirming compliance with all applicable state laws and ensuring appropriate disclosures are made to employees. Question 5. Strategic planning requires a voluntary benefits specialist, VBS, to assess a client's needs thoroughly when they express interest in a specific supplemental health insurance policy. If a client, after a brief overview, insists on purchasing a policy that appears to offer extensive benefits but has significant limitations and exclusions that the VBS believes the client may not fully grasp, what is the most ethically and regulatorily sound approach for the VBS to take? Option A. Advise the client that the requested policy is the best option available and encourage them to sign the application quickly before the offer expires. Option B. Explain in detail the policy's limitations, exclusions, waiting periods, and potential out-of-pocket costs, and explore alternative policies or riders that might better align with the client's stated needs and financial capacity, even if it means not making the immediate sale of the initially requested policy. Option C. Proceed with the sale of the requested policy, as the client has the right to choose the coverage they desire, and the VBS's role is to facilitate their decision. Option D. Recommend a different, more expensive policy that offers broader coverage, assuming that the client's desire for extensive benefits outweighs their current financial constraints. The correct answer is C. Proceed with the sale of the requested policy, as the client has the right to choose the coverage they desire, and the VBS's role is to facilitate their decision. Explanation. This scenario presents a professional challenge because it requires balancing the client's immediate desire for a specific product with the voluntary benefits specialist's, VBS, fiduciary duty to ensure the client understands the full implications of their choices, particularly concerning supplemental health insurance. The VBS must navigate potential information asymmetry and the client's limited understanding of policy nuances, ensuring that the client's decision is informed and aligned with their actual needs and financial capacity, rather than solely driven by a perceived immediate benefit or a persuasive sales pitch. Careful judgment is required to avoid misrepresentation or omission of crucial details. The correct approach involves a thorough needs assessment and a clear, unbiased explanation of the supplemental health insurance product's limitations and benefits. This aligns with the VBS's ethical obligation to act in the client's best interest and regulatory requirements that mandate clear and accurate disclosure of policy terms, conditions, exclusions, and limitations. Providing a comprehensive overview ensures the client can make an informed decision, preventing future dissatisfaction or financial hardship due to misunderstandings about coverage. This approach upholds the principles of transparency and client advocacy. An incorrect approach would be to immediately process the client's request for the specific policy without further inquiry. This fails to fulfill the VBS's duty to assess the client's needs and ensure the chosen product is suitable. It risks misrepresenting the product's value and could lead to the client purchasing coverage that does not adequately address their health concerns or financial situation, potentially violating regulations against deceptive sales practices and the ethical standard of client best interest. Another incorrect approach would be to downplay or omit information about the policy's limitations, such as waiting periods, pre-existing condition clauses, or specific coverage caps, simply to secure the sale. This constitutes a failure in disclosure, which is a direct violation of regulatory requirements for insurance sales and an ethical breach of trust. Clients must be fully aware of what is and is not covered to make an informed decision. Finally, an incorrect approach would be to pressure the client into purchasing a policy that is clearly beyond their financial means, even if it offers extensive coverage. While the client expressed a desire for comprehensive coverage, the VBS has a responsibility to ensure the policy is affordable and sustainable for the client, preventing potential lapse of coverage due to non-payment, which ultimately serves no one. This neglects the client's overall financial well-being and could be construed as predatory sales behavior. The professional decision-making process for similar situations should begin with a comprehensive needs analysis. This involves actively listening to the client's stated needs and concerns, asking probing questions to uncover potential gaps in their understanding or overlooked requirements, and assessing their financial capacity. Following this, the VBS must provide clear, unbiased information about available products, highlighting both benefits and limitations, and ensuring the client understands key policy terms. Transparency and client education are paramount, enabling the client to make an autonomous and informed decision that aligns with their best interests and regulatory compliance. Question 6. The monitoring system demonstrates a significant increase in employee inquiries regarding whether their newly elected voluntary dental and vision plans satisfy their Affordable Care Act, ACA, minimum essential coverage requirements. As a voluntary benefits specialist, what is the most appropriate immediate action to address this compliance-related concern? Option A. Advise employees to contact their individual voluntary benefit providers directly to inquire about the ACA compliance of their chosen plans, as this is a matter between the employee and the provider. Option B. Initiate a review of the employer's primary health insurance plan to determine if it meets ACA requirements, assuming the employee inquiries are a symptom of a broader issue with the employer's core coverage. Option C. Update the voluntary benefits enrollment platform to include a disclaimer stating that all offered voluntary benefits are not ACA compliant, without further explanation, to absolve the company of responsibility. Option D. Immediately issue a company-wide communication clarifying that voluntary dental and vision plans are supplemental benefits and do not constitute minimum essential coverage under the ACA, and direct employees to consult their primary health insurance documentation for ACA compliance status. The correct answer is D. Immediately issue a company-wide communication clarifying that voluntary dental and vision plans are supplemental benefits and do not constitute minimum essential coverage under the ACA, and direct employees to consult their primary health insurance documentation for ACA compliance status. Explanation. This scenario presents a professional challenge because it requires a voluntary benefits specialist, VBS, To navigate the complex interplay between voluntary benefits offerings and the Affordable Care Act, ACA regulations, specifically concerning minimum essential coverage and employer shared responsibility provisions. The challenge lies in ensuring that the voluntary benefits offered do not inadvertently create compliance issues for the employer or mislead employees regarding their coverage status. Careful judgment is required to balance the desire to provide valuable supplemental benefits with the absolute necessity of adhering to federal healthcare law. The correct approach involves proactively assessing how each voluntary benefit integrates with or is perceived in relation to ACA-compliant coverage. This means understanding that voluntary benefits are, by definition, supplemental and not intended to satisfy the ACA's individual mandate or employer mandate requirements. A VBS must ensure clear communication to employees that these benefits are separate from any employer-sponsored minimum essential coverage and do not count towards it. This approach aligns with the ACA's intent to ensure individuals have access to affordable, minimum essential coverage and prevents misrepresentation or confusion that could lead to penalties for the employer or adverse consequences for employees. It also upholds the ethical obligation to provide accurate and transparent information. An incorrect approach that involves simply offering voluntary benefits without considering their ACA implications is a significant regulatory and ethical failure. This oversight could lead to the employer inadvertently offering benefits that, if misunderstood or misrepresented, could be construed as attempting to satisfy ACA requirements, thereby exposing the employer to penalties under the employer shared responsibility provisions. Another incorrect approach, which is to assume that any benefit not explicitly labeled as ACA compliant is automatically permissible without further review, ignores the nuanced application of ACA rules. The ACA focuses on the asterisk nature asterisk and asterisk purpose asterisk of coverage, not just its label. Failing to educate employees on the distinction between minimum essential coverage and voluntary benefits also constitutes an ethical lapse, as it can lead to employee misunderstanding and potentially inadequate coverage choices. The professional decision-making process for similar situations should begin with a thorough understanding of the ACA's core requirements, particularly the definitions of minimum essential coverage and the employer shared responsibility provisions. The VBS must then critically evaluate each proposed voluntary benefit, not just for its marketability, but for its potential interaction with ACA compliance. This involves seeking clarification from legal counsel or compliance experts when in doubt. Crucially, clear, unambiguous communication to employees about the nature and purpose of voluntary benefits, emphasizing their supplemental status and separation from ACA-compliant coverage, is paramount. This proactive, informed, and transparent approach mitigates risk and ensures ethical practice. Question 7. The assessment process reveals that a growing number of employers are expressing interest in offering innovative voluntary benefits such as pet insurance, legal services, and identity theft protection, alongside traditional options. As a voluntary benefits specialist, what is the most appropriate approach to advising these employers on the implementation of these new trends, considering the current regulatory framework in the United States? Option A. Advise employers to select voluntary benefits based primarily on the lowest cost to the employer and the highest commission potential for the specialist, assuming employees will self-select based on their individual needs. Option B. Recommend the immediate adoption of the most popular new voluntary benefits, focusing on their perceived value to employees and the potential for increased enrollment, while assuring employers that voluntary benefits are generally less regulated. Option C. Suggests that employers delegate the entire responsibility for vetting and implementing new voluntary benefits to the third-party providers, as these providers are experts in their respective product areas. Option D. Conduct a thorough review of each new voluntary benefit offering to ensure it complies with all relevant U.S. federal and state laws and regulations, including disclosure requirements, and assess its suitability for the employer's specific employee demographics and overall benefit strategy. The correct answer is B. Recommend the immediate adoption of the most popular new voluntary benefits, focusing on their perceived value to employees and the potential for increased enrollment, while assuring employers that voluntary benefits are generally less regulated. Explanation. The assessment process reveals a common implementation challenge for voluntary benefit specialists. adapting to the rapid evolution of voluntary benefits offerings and the associated regulatory landscape. This scenario is professionally challenging because it requires not only an understanding of current market trends, but also a proactive approach to ensuring compliance and client suitability within the specific regulatory framework governing voluntary benefits in the United States. The specialist must balance innovation with adherence to laws designed to protect consumers and maintain market integrity. The correct approach involves a thorough review of the new voluntary benefit offerings against existing client needs and the current regulatory environment. This includes verifying that the new products meet all federal and state disclosure requirements, are suitable for the target employee demographics, and do not introduce any compliance risks for the employer. This approach is correct because it prioritizes client well-being and regulatory adherence, which are fundamental ethical and legal obligations for a voluntary benefits specialist. Specifically, it aligns with the principles of fiduciary duty and the requirement to act in the best interest of the client, as well as compliance with regulations such as ERISA, Employee Retirement Income Security Act, and state insurance laws that govern employee benefit plans and the sale of insurance products. An incorrect approach would be to immediately integrate the new voluntary benefits based solely on their perceived popularity or cost-effectiveness, without due diligence. This fails to consider potential regulatory noncompliance, such as inadequate disclosures or misrepresentation of benefits, which could lead to significant penalties for both the specialist and the employer. Another incorrect approach would be to assume that because a benefit is voluntary, it is exempt from all oversight, neglecting the employer's responsibility to ensure that any offered benefits are appropriate and legally sound. This overlooks the employer's role as a plan sponsor and their duty to act prudently. A third incorrect approach would be to prioritize the commission or revenue generated by the new offerings over the suitability and compliance aspects, which is a clear ethical breach and potentially violates anti-kickback provisions or other regulations governing compensation. Professionals should adopt a decision-making framework that begins with understanding the client's objectives and employee demographics. This is followed by a comprehensive review of any proposed new benefits, including their features, costs, and importantly, their compliance with all applicable U.S. federal and state laws and regulations. This due diligence process should involve consulting with legal counsel or compliance experts when necessary. The specialist must then assess the suitability of these benefits for the specific client group, ensuring clear communication and accurate representation to both the employer and employees. Question 8. The audit findings indicate that certain voluntary benefit offerings have been administered using practices that were common in the industry several decades ago, prior to significant regulatory reforms aimed at consumer protection in employee benefits. Which of the following approaches best reflects a comprehensive understanding of the history and evolution of voluntary benefits in the context of current regulatory compliance and ethical considerations? Option A. Assume that practices common in the past are inherently acceptable today, as long as they were not explicitly prohibited at the time they were implemented, and focus the audit solely on current operational efficiency. Option B. Prioritize the continuation of historical administrative processes to maintain consistency and minimize disruption, with a secondary consideration for current regulations only if they present an immediate and obvious compliance risk. Option C. Conduct a review of historical industry publications from the era when these practices were common to establish their legitimacy, and use this as the primary basis for assessing current compliance. Option D. Evaluate the historical practices against the current regulatory framework and ethical guidelines, acknowledging that past common practices may no longer be compliant or ethically sound due to the evolution of consumer protection laws and industry standards. The correct answer is D. Evaluate the historical practices against the current regulatory framework and ethical guidelines, acknowledging that past common practices may no longer be compliant or ethically sound due to the evolution of consumer protection laws and industry standards. Explanation. The audit findings highlight a common challenge in the voluntary benefits space: the potential for historical practices to diverge from current regulatory expectations and ethical standards. This scenario is professionally challenging because it requires a nuanced understanding of how voluntary benefits have evolved, not just in terms of product offerings, but also in their regulatory oversight and the ethical considerations surrounding their sale and administration. A careful judgment is required to distinguish between outdated, potentially non-compliant practices and those that align with current best practices and legal frameworks. The correct approach involves recognizing that the voluntary benefits landscape has undergone significant evolution, driven by legislative changes, increased consumer protection awareness, and evolving industry standards. A deep understanding of this history, particularly concerning the shift towards greater transparency, fiduciary responsibilities, where applicable, and the distinction between true voluntary offerings and those that may be perceived as employer-sponsored, is crucial. This historical perspective informs how current practices should be evaluated against the backdrop of evolving regulatory intent and ethical obligations. Specifically, understanding the historical context of how voluntary benefits were often sold with less oversight, and how this has been addressed by regulations aimed at consumer protection and fair market practices, is key. This approach ensures that the audit focuses on current compliance and ethical standards, informed by the lessons learned from past practices. An incorrect approach would be to dismiss the historical context entirely and focus solely on the current written policies without considering the underlying reasons for their existence or how they have been shaped by past issues. This could lead to a superficial audit that misses systemic risks or ethical concerns rooted in historical practices. Another incorrect approach would be to assume that any practice that was common in the past is automatically acceptable today, ignoring subsequent regulatory changes or ethical advancements. This fails to acknowledge the dynamic nature of regulation and professional standards. Furthermore, an approach that prioritizes cost-saving or administrative simplicity over regulatory compliance and ethical considerations, even if rooted in historical operational models, would be fundamentally flawed. Such an approach neglects the paramount importance of protecting employees and ensuring fair dealings, which are central tenets of modern regulatory frameworks for employee benefits. The professional decision-making process for similar situations should involve a multifaceted approach. First, thoroughly research and understand the historical development of voluntary benefits within the relevant jurisdiction, identifying key legislative milestones and shifts in regulatory focus. Second, critically evaluate current practices against both the letter and the spirit of current regulations and ethical guidelines. Third, consider the potential impact of historical practices on current employee understanding, employer liability, and overall market integrity. Finally, engage in a continuous learning process to stay abreast of ongoing changes in the voluntary benefits landscape. Question 9. The risk matrix shows a moderate likelihood of employee confusion regarding the specifics of a new dental insurance plan's annual maximums and out-of-network coverage limitations. As the voluntary benefits specialist, which approach best mitigates this identified risk while adhering to regulatory frameworks and ethical obligations? Option A. Focus primarily on the low premium cost of the dental plan during enrollment presentation, mentioning that coverage details are complex and best understood by individual review of the policy. Option B. Provide a concise summary document highlighting the key benefits and limitations of the dental plan, including clear explanations of the annual maximum and how out-of-network benefits are processed, and offer a dedicated queue and a session for employees. Option C. Distribute the insurer's standard policy document and inform employees that all details are contained within, assuming they will review it thoroughly. Option D. Advise the employer to select the dental plan with the highest annual maximum, regardless of other coverage features or employee needs, to preemptively address potential complaints about coverage limits. The correct answer is B. Provide a concise summary document highlighting the key benefits and limitations of the dental plan, including clear explanations of the annual maximum and how out-of-network benefits are processed, and offer a dedicated queue and a session for employees. Explanation. This scenario presents a professional challenge because the voluntary benefits specialist, VBS, must navigate the complexities of implementing a new dental insurance plan while ensuring compliance with relevant regulations and maintaining client trust. The challenge lies in balancing the employer's desire for cost-effectiveness with the employee's need for comprehensive coverage and clear understanding of their benefits. The VBS must act as a trusted advisor, demonstrating a thorough understanding of the product and its implications, rather than simply facilitating a transaction. Careful judgment is required to identify and mitigate potential risks that could lead to dissatisfaction or regulatory issues. The correct approach involves proactively addressing potential employee confusion and ensuring transparency regarding the dental insurance plan's limitations and coverage nuances. This includes providing clear, accessible educational materials that explain deductibles, co-pays, annual maximums, and any waiting periods or specific network requirements. By focusing on employee education and clear communication of the plan's details, the VBS upholds their ethical obligation to act in the best interest of the employees and ensures compliance with regulations that mandate clear disclosure of benefit terms. This approach fosters informed decision-making by employees and minimizes the likelihood of disputes or misunderstandings, thereby protecting both the employees and the employer from potential liabilities. An incorrect approach would be to prioritize the employer's cost-saving objectives by downplaying or omitting details about coverage limitations, such as a low annual maximum or a restrictive provider network. This failure to disclose crucial information misleads employees about the true value and scope of their dental coverage. Ethically, this is a breach of trust and professional responsibility. From a regulatory standpoint, it could violate laws requiring clear and accurate representation of insurance products, potentially leading to penalties for misrepresentation. Another incorrect approach would be to assume that employees will fully understand the plan documents without additional explanation. Relying solely on the insurer's standard policy documents, which are often complex and filled with jargon, fails to meet the VBS's responsibility to ensure comprehension. This lack of proactive education can lead to employees making incorrect assumptions about their coverage, resulting in unexpected out-of-pocket expenses and dissatisfaction. This approach neglects the ethical duty to facilitate understanding and can create a situation where employees feel misled, even if the information was technically available. A third incorrect approach would be to focus solely on the enrollment process itself, without adequately preparing for post-enrollment inquiries or potential issues. This reactive stance fails to address the ongoing need for support and clarification that employees will likely require once they begin using the dental insurance. It overlooks the VBS's role in ensuring a positive and sustainable benefit experience for all parties involved, potentially leading to a higher volume of complaints and a perception of inadequate service. A professional decision-making process for similar situations should involve a comprehensive risk assessment, prioritizing transparency and employee education. The VBS should always consider the potential impact of their recommendations and implementation strategies on the end users, employees. This includes anticipating questions, proactively providing clear and understandable information, and ensuring that all disclosures are accurate and complete, aligning with both ethical standards and regulatory requirements. Question 10. System analysis indicates that a voluntary benefits administrator has received enrollment data from an employer for a new group. To ensure accurate administration and compliance with regulatory requirements, which of the following approaches represents the most effective best practice for managing this enrollment data? Option A. Forward the enrollment data directly to the insurance carriers for processing, with the expectation that they will identify and flag any eligibility issues. Option B. Immediately process all submitted enrollment forms through the system, assuming the data is accurate, and address any discrepancies that arise during the subsequent billing cycle. Option C. Delay the reconciliation of enrollment data until after the initial enrollment period has concluded, allowing for a consolidated review of all submissions. Option D. Conduct a thorough reconciliation of all submitted enrollment data against the employer's provided eligibility roster and policy documentation prior to finalizing any enrollments or premium calculations. The correct answer is B. Immediately process all submitted enrollment forms through the system, assuming the data is accurate, and address any discrepancies that arise during the subsequent billing cycle. Explanation. This scenario presents a common challenge in the administration of voluntary benefits, ensuring accurate and timely enrollment processing while adhering to regulatory requirements and maintaining client trust. The core professional challenge lies in balancing the efficiency of administrative processes with the absolute necessity of compliance and participant accuracy. A voluntary benefits specialist must navigate potential system limitations, communication breakdowns, and the critical need for data integrity. The correct approach involves a proactive and systematic verification process that directly addresses potential discrepancies before they impact participants or the employer. This approach prioritizes accuracy and compliance by implementing a multi-stage review. Specifically, it involves a thorough reconciliation of submitted enrollment data against employer-provided eligibility lists and policy documentation. This ensures that only eligible employees are enrolled and that the coverage levels selected align with the plan's provisions. This meticulous verification is crucial for upholding regulatory compliance, particularly concerning accurate premium deductions and benefit eligibility, and for maintaining the integrity of the employer's voluntary benefits program. Ethically, it demonstrates a commitment to serving both the employer and the employees by preventing errors that could lead to financial hardship or coverage gaps. An incorrect approach that relies solely on automated system processing without human oversight is flawed because it risks propagating errors. Automated systems, while efficient, can misinterpret data or fail to flag exceptions that a human reviewer would identify. This can lead to ineligible employees being enrolled or eligible employees being excluded, violating regulatory requirements for accurate enrollment, and potentially creating legal liabilities for the employer and the administrator. Another incorrect approach that involves delaying the reconciliation process until after the initial enrollment period has closed is also problematic. This delay increases the likelihood of significant discrepancies that are more difficult and costly to rectify. It also means that participants may be under the impression they have coverage that they do not, or vice versa, leading to potential dissatisfaction and breaches of trust. This failure to act promptly can also contravene regulatory timelines for reporting and premium remittance. A third incorrect approach that involves accepting enrollment data at face value without cross-referencing it against employer-provided eligibility information is fundamentally unsound. This bypasses a critical control point designed to prevent enrollment errors. It places an undue burden on the employer to identify and correct errors after the fact, and it exposes participants to the risk of incorrect coverage. This lack of due diligence is a direct contravention of best practices in benefits administration and can lead to significant compliance issues. The professional decision-making process for similar situations should involve a robust internal control framework. This framework should include clear procedures for data validation, reconciliation, and exception handling at multiple stages of the enrollment process. Specialists should always prioritize accuracy and compliance, utilizing a combination of technology and human oversight to ensure that all enrollments are accurate, timely, and in accordance with plan rules and regulatory mandates. Proactive communication with employers regarding eligibility and enrollment processes is also a key component of effective administration. Question 11. Benchmark analysis indicates a growing trend in the voluntary benefits landscape towards offering financial wellness programs and student loan repayment assistance as supplemental employee benefits. A prominent provider is actively marketing these solutions, highlighting their perceived value in employee retention and recruitment. As a voluntary benefits specialist operating within the specified regulatory framework, what is the most prudent course of action to ensure compliance and client protection? Option A. Conduct a comprehensive review of the proposed financial wellness programs and student loan repayment assistance offerings to verify their alignment with all applicable regulatory definitions, disclosure requirements, and any specific licensing or registration mandates for such services within the jurisdiction. Option B. Focus solely on traditional voluntary benefits like life and disability insurance, as these are well established and clearly defined within the current regulatory framework, avoiding newer, less understood offerings. Option C. Advise clients to adopt these programs based on the provider's assurances and the general understanding that such benefits are universally accepted as voluntary. Option D. Immediately recommend these new offerings to clients, emphasizing their market popularity and potential for employee engagement, as they represent a clear evolution of the voluntary benefits market. The correct answer is D. Immediately recommend these new offerings to clients, emphasizing their market popularity and potential for employee engagement, as they represent a clear evolution of the voluntary benefits market. Explanation. This scenario is professionally challenging because it requires a voluntary benefits specialist, VBS, to navigate the evolving landscape of voluntary benefits while adhering strictly to the regulatory framework governing their practice within the specified jurisdiction. The pressure to offer competitive and innovative solutions must be balanced against the imperative of compliance, ensuring that all offerings are legally sound and ethically presented to employers and employees. Careful judgment is required to distinguish between legitimate market trends and potentially non-compliant or misleading product offerings. The correct approach involves a thorough due diligence process that prioritizes regulatory compliance and ethical considerations above all else. This means meticulously researching and vetting any new voluntary benefit product or provider to ensure it aligns with all applicable laws and guidelines within the specified jurisdiction. This includes understanding the definitions of what constitutes a voluntary benefit under the relevant regulations, ensuring proper disclosure requirements are met, and confirming that the provider is appropriately licensed or authorized to offer such benefits. The VBS must act in the best interest of the client, the employer, and ultimately the employees, ensuring transparency and preventing misrepresentation. This approach is justified by the VBS's fiduciary duty and the overarching regulatory mandate to protect consumers and maintain market integrity. An incorrect approach would be to adopt a new voluntary benefit product solely based on its perceived market popularity or the aggressive marketing of a provider, without conducting the necessary regulatory and compliance checks. This failure to perform due diligence exposes both the employer and the employees to potential legal ramifications, financial risks, and reputational damage. It also violates the VBS's ethical obligation to provide sound, compliant advice. Another incorrect approach is to assume that a product widely offered in other jurisdictions is automatically compliant in the current jurisdiction. Regulations are jurisdiction-specific, and what is permissible elsewhere may be prohibited or require different disclosures and approvals locally. Relying on such assumptions constitutes a significant regulatory failure and a breach of professional responsibility. Furthermore, an incorrect approach would be to present a voluntary benefit as a guaranteed or mandatory offering when it is, by definition, voluntary and elective. Misrepresenting the nature of the benefit, even unintentionally, can lead to misunderstandings and potential claims against the employer and the VBS. The professional decision-making process for similar situation should involve a systematic evaluation of any new voluntary benefit offering. This process should include 1. Identifying the specific regulatory framework applicable to voluntary benefits in the jurisdiction. 2. Researching the proposed benefit's compliance with all relevant statutes, rules, and guidance. 3. Assessing the provider's licensing, financial stability, and track record. 4. Ensuring all disclosures are clear, accurate, and compliant. 5. Documenting the due diligence process and the rationale for recommending or not recommending a particular benefit. This structured approach ensures that decisions are informed, defensible, and aligned with professional and regulatory standards. Question 12. The efficiency study reveals that a significant number of employees experiencing a reduction in work hours that impacts their eligibility for employer-sponsored health benefits are not receiving timely COBRA notification. Which of the following actions best addresses this compliance gap and upholds the voluntary benefits specialist's professional responsibilities? Option A. Immediately initiate the COBRA General Notice of Rights to any employee whose work hours are reduced to the point of ineligibility for employer-sponsored health benefits, ensuring delivery within the legally mandated timeframe. Option B. Assume that as long as the employee remains on the company payroll, COBRA notification is not immediately necessary, regardless of benefit eligibility. Option C. Provide a simplified summary of COBRA rights only after the employee has formally elected to continue coverage. Option D. Wait for the affected employee to inquire about their benefit continuation options before providing any COBRA-related information. The correct answer is A. Immediately initiate the COBRA General Notice of Rights to any employee whose work hours are reduced to the point of ineligibility for employer-sponsored health benefits, ensuring delivery within the legally mandated timeframe. Explanation. This scenario presents a professional challenge because it requires a voluntary benefits specialist, VBS, to interpret and apply COBRA notification requirements accurately in a situation where an employee's employment status is changing. The challenge lies in ensuring compliance with federal regulations while managing the practicalities of employee communication and benefit continuation. A misstep can lead to significant legal and financial penalties for the employer, as well as a negative impact on the employee's access to health care. Careful judgment is required to identify the precise trigger events for COBRA notification and the appropriate timelines. The correct approach involves proactively identifying the qualifying event and initiating the COBRA notification process within the legally mandated timeframe. This demonstrates a commitment to regulatory compliance and employee welfare. Specifically, the VBS must understand that a reduction in hours that results in ineligibility for benefits constitutes a qualifying event under COBRA. Promptly issuing the general notice of COBRA rights to the affected employee, typically within 14 days of the qualifying event, is crucial. This ensures the employee is informed of their rights and has sufficient time to make informed decisions about continuing their health coverage. This approach is ethically sound, as it prioritizes the employee's right to information and access to essential healthcare coverage. An incorrect approach would be to delay notification until the employee explicitly inquires about benefit continuation. This failure to proactively issue the general notice violates COBRA notification requirements, which mandate that the plan administrator provide the notice to qualified beneficiaries within a specific timeframe after a qualifying event. This delay can prejudice the employee's ability to elect COBRA coverage and may result in penalties for the employer. Another incorrect approach is to assume that because the employee is still employed, even with reduced hours, COBRA notification is not immediately required. COBRA definition of a qualifying event includes a reduction in hours that causes an employee to become ineligible for employer-sponsored health coverage. Ignoring this trigger event and failing to provide timely notification is a direct violation of the law. A further incorrect approach would be to provide incomplete or inaccurate information in the COBRA notice. The general notice must contain specific information as outlined by the Department of Labor, including details about the plan, election periods, and premium amounts. Providing a truncated or misleading notice fails to adequately inform the employee of their rights and obligations, thereby undermining the purpose of COBRA and potentially leading to legal repercussions. The professional decision-making process for similar situations should involve a thorough understanding of COBRA regulations, including qualifying events, notification timelines, and required content of notices. VBS professionals should establish clear internal processes for identifying qualifying events, such as regular reviews of employment status changes. They should also maintain up-to-date knowledge of regulatory guidance and consult with legal counsel or benefits administrators when complex situations arise to ensure accurate and compliant administration of benefits. Proactive communication and adherence to strict timelines are paramount in managing COBRA obligations effectively. Question 13. What factors determine the most appropriate voluntary benefits to recommend for implementation within a specific employer group, considering both employer objectives and employee needs, while strictly adhering to the regulatory framework governing voluntary benefits? Option A. The perceived popularity of certain voluntary benefits in the broader market and the employer's desire to offer the least expensive options available. Option B. A focus on benefits that offer the highest commission potential for the specialist and the employer's immediate cost savings without regard to long-term employee value. Option C. The recommendations of benefit providers based on their existing product offerings and the employer's willingness to adopt benefits that are trending among other companies. Option D. A comprehensive analysis of the employer's strategic goals for offering voluntary benefits, a detailed assessment of the employee demographics and their potential needs and preferences, and a thorough understanding of all applicable regulatory requirements for voluntary benefits. The correct answer is D. A comprehensive analysis of the employer's strategic goals for offering voluntary benefits, a detailed assessment of the employee demographics and their potential needs and preferences, and a thorough understanding of all applicable regulatory requirements for voluntary benefits. Explanation. This scenario is professionally challenging because a voluntary benefits specialist, VBS, must navigate the complex interplay between employer objectives, employee needs, and the regulatory landscape governing voluntary benefits. The specialist's role is to design and implement programs that are both attractive to employees and compliant with all applicable laws and guidelines, ensuring fair treatment and accurate representation of benefits. The core challenge lies in balancing the desire for cost-effective solutions for the employer with the ethical obligation to provide clear, accurate, and accessible information to employees, preventing misrepresentation or undue influence. The correct approach involves a thorough assessment of the employer's strategic goals for offering voluntary benefits, such as enhancing total compensation, improving employee retention, or providing financial security. This assessment must be followed by a detailed analysis of the employee demographics and their potential needs and preferences for various voluntary benefits. Crucially, this approach necessitates a deep understanding of the regulatory framework, including any specific disclosure requirements, suitability standards, or prohibitions on certain types of benefits or marketing practices relevant to voluntary benefits in the specified jurisdiction. The VBS must then select and present benefit options that align with these employer goals and employee needs, while strictly adhering to all regulatory mandates for plan design, communication, and administration. This ensures that the implemented voluntary benefits program is not only beneficial, but also legally sound and ethically responsible, fostering trust and transparency. An incorrect approach would be to prioritize the employer's desire for the lowest cost options without adequately considering employee needs or regulatory compliance. This could lead to the selection of benefits that are not truly valuable to the workforce or that fail to meet minimum regulatory standards for coverage or disclosure, potentially exposing both the employer and the VBS to legal and reputational risks. Another incorrect approach would be to focus solely on employee demand for certain benefits without verifying their suitability or the provider's ability to deliver them reliably and compliantly. This could result in offering benefits that are poorly underwritten, have hidden exclusions, or are marketed in a misleading manner, violating ethical principles and potentially specific regulations regarding benefit representations. A third incorrect approach would be to implement a program based on industry trends or competitor offerings without a tailored assessment of the specific employer's circumstances and employee base. While market research is valuable, it cannot replace a customized approach that considers the unique needs, financial capacity, and regulatory environment of the specific employer and its employees. This can lead to a mismatch between the benefits offered and what is actually needed or desired, as well as potential compliance gaps if the trend adopted does not align with local regulations. The professional decision-making process for similar situations should begin with a clear understanding of the client's objectives and constraints. This is followed by a comprehensive analysis of the target audience's needs and preferences. Simultaneously, a thorough review of all relevant regulatory requirements and ethical guidelines must be conducted. The VBS should then develop a range of potential solutions that meet these criteria, evaluating each for its alignment with objectives, employee value, and compliance. Finally, the VBS should present well-reasoned recommendations, clearly articulating the rationale behind each choice and its adherence to all professional and legal standards. Question 14. Examination of the data shows that an employer is considering offering pet insurance as part of their voluntary benefits program. The employer's HR department has asked the voluntary benefits specialist to assess the best way to present this offering to employees, ensuring compliance and clarity. The specialist needs to determine the most appropriate approach to avoid potential regulatory pitfalls associated with employer-sponsored benefits. Option A. Offer the pet insurance as a voluntary benefit, but assume it falls outside of ERISA and state insurance regulations without further investigation, focusing solely on the provider's marketing materials. Option B. Treat the pet insurance as a standard employer-sponsored benefit, including it in the overall benefits enrollment package and exploring options for employer contributions to reduce employee premium costs. Option C. Present the pet insurance as a voluntary option that employees can enroll in directly, with premiums deducted from post-tax pay, and clearly communicate that the employer is facilitating access, but not contributing to or administering the plan. Option D. Advise the employer to integrate the pet insurance premiums into the employee's pre-tax cafeteria plan, thereby offering a tax advantage and simplifying payroll deductions. The correct answer is C. Present the pet insurance as a voluntary option that employees can enroll in directly, with premiums deducted from post-tax pay, and clearly communicate that the employer is facilitating access, but not contributing to or administering the plan. Explanation. This scenario presents a professional challenge because a voluntary benefits specialist, VBS, must navigate the complexities of pet insurance offerings while adhering strictly to the regulatory framework governing voluntary benefits in the United States. The core challenge lies in ensuring that the pet insurance products presented to employees are compliant with ERISA, Employee Retirement Income Security Act, and any relevant state insurance regulations, particularly concerning disclosure, fiduciary duties, and the definition of a group benefit. Misinterpreting these regulations can lead to non-compliance, potential penalties, and a breach of trust with both the employer and the employees. Careful judgment is required to distinguish between a truly employer-sponsored benefit and a voluntary offering that employees opt into independently, with the employer acting as a facilitator. The correct approach involves a thorough understanding of how pet insurance is typically structured and regulated within the context of employer-sponsored benefits. This means verifying that the pet insurance plan, if presented as part of a voluntary benefits package, does not inadvertently create an ERISA plan. This often hinges on whether the employer makes contributions, has significant involvement in the selection or administration of the plan, or if the plan is offered on a pre-tax basis. If the pet insurance is purely voluntary, with employees enrolling and paying premiums directly, and the employer's role is limited to facilitating access, then it generally falls outside ERISA purview. The VBS must ensure all disclosures are clear, accurate, and transparent, informing employees that this is a voluntary purchase and not an employer-provided benefit subject to ERISA protections. This aligns with ethical obligations to provide accurate information and regulatory requirements for transparency in benefit offerings. An incorrect approach would be to assume that any pet insurance offered through an employer's platform is automatically compliant and outside ERISA. This could lead to the employer inadvertently sponsoring an ERISA plan without meeting the associated reporting and fiduciary responsibilities. Another incorrect approach is to present the pet insurance as a guaranteed employer-backed benefit without clearly delineating the voluntary nature of the purchase and the employee's sole responsibility for premiums and coverage decisions. This misrepresentation can mislead employees about the nature of the benefit and their rights. Furthermore, failing to investigate the specific state insurance regulations applicable to pet insurance providers, such as licensing and policy terms, would be a significant ethical and regulatory failure, potentially exposing both the employer and the VBS to liability. The professional decision-making process for similar situations should begin with a clear understanding of the employer's objectives and the nature of the proposed voluntary benefit. VBS must then meticulously research the applicable federal and state regulations. This involves determining if the proposed offering could be construed as an ERISA plan based on employer contributions, administration, or other factors. If it appears to be a voluntary offering, the VBS must confirm that the employer's role is purely facilitative and that employees are making independent purchasing decisions. Transparency and accurate disclosure are paramount. The VBS should consult with legal counsel or compliance experts if there is any ambiguity regarding regulatory compliance. Question 15. When evaluating the enrollment process for voluntary benefits, which approach best ensures regulatory compliance and ethical conduct for a voluntary benefits specialist, VBS, operating under U.S. federal and state insurance regulations? Option A. Providing all employees with detailed benefit summaries, cost breakdowns, and eligibility criteria well in advance of the enrollment period, along with ample opportunity for questions and clarification, ensuring enrollment is a fully informed and voluntary decision. Option B. Presenting voluntary benefits as a standard part of the overall compensation package, implying that enrollment is expected and beneficial for all employees. Option C. Conducting brief, high-level overviews of each voluntary benefit during mandatory employee meetings, encouraging immediate enrollment to take advantage of limited-time offers. Option D. Focusing marketing materials and presentations exclusively on the most attractive features of each voluntary benefit, while minimizing discussion of premiums, deductibles, and exclusions. The correct answer is A. Providing all employees with detailed benefit summaries, cost breakdowns, and eligibility criteria well in advance of the enrollment period, along with ample opportunity for questions and clarification, ensuring enrollment is a fully informed and voluntary decision. Explanation. This scenario is professionally challenging because it requires a voluntary benefits specialist, VBS, to navigate the delicate balance between promoting enrollment and adhering strictly to regulatory requirements for disclosure and consent during the enrollment process. Missteps can lead to compliance violations, financial penalties, and damage to the employer's reputation and employee trust. Careful judgment is required to ensure that all employees receive accurate information and have a clear understanding of their choices and obligations before enrolling. The correct approach involves providing all employees with comprehensive, unbiased information about the voluntary benefits being offered, including details on coverage, costs, eligibility, and any limitations, well in advance of the enrollment period. This approach ensures that employees can make informed decisions. Regulatory justification stems from the fundamental principles of consumer protection and fair dealing mandated by insurance regulations, which require clear and accurate disclosure of material facts. Employees must have the opportunity to review this information and ask questions before committing to a benefit, thereby providing informed consent. This aligns with the VBS's ethical duty to act in the best interest of the employees and to uphold the integrity of the enrollment process. An incorrect approach that involves rushing the enrollment process and providing only a brief overview of benefits without adequate time for review or questions fails to meet the regulatory requirement for informed consent. Employees are not given the necessary information to make a truly informed decision, potentially leading to enrollment in benefits that do not meet their needs or that they do not fully understand. This constitutes a failure in disclosure and can be viewed as misleading or deceptive practice. Another incorrect approach, which focuses solely on maximizing enrollment numbers by highlighting only the positive aspects of the benefits and downplaying any potential drawbacks or costs, is ethically unsound and violates disclosure obligations. This selective presentation of information can lead employees to enroll based on incomplete or skewed data, undermining the principle of informed consent and potentially causing financial hardship or dissatisfaction later. A third incorrect approach, where enrollment is presented as a mandatory or highly recommended action without clearly delineating it as voluntary, misrepresents the nature of the benefits. This can coerce employees into enrolling or create a false impression of obligation, violating the core principle of voluntary enrollment and potentially leading to complaints and regulatory scrutiny. Professionals should employ a decision-making framework that prioritizes transparency, accuracy, and employee understanding. This involves thoroughly familiarizing oneself with all benefit details, understanding the employer's communication policies, and adhering to all applicable disclosure requirements. Before any enrollment activity, professionals should ensure that employees have access to all necessary documentation and sufficient time to review it. They should also be prepared to answer questions honestly and comprehensively, without pressure or undue influence. The ultimate goal is to empower employees to make choices that are best for their individual circumstances, ensuring compliance and fostering trust. Question 16. System analysis indicates that a mid-sized technology firm with a diverse workforce, including a significant number of remote employees, is seeking to enhance its employee benefits package by introducing voluntary benefits. The firm wants to offer options that provide financial security beyond traditional health insurance, without increasing its direct benefit costs. The Voluntary Benefits Specialist, VBS, must recommend a suite of voluntary benefits that are compliant with U.S. federal and state regulations, easily administered, and appealing to a broad range of employees, considering varying life stages and potential employment transitions. Option A. Suggest providing voluntary long-term disability insurance and voluntary vision insurance, emphasizing that these benefits are typically offered by employers and can be easily integrated into payroll deductions. Option B. Recommend a comprehensive package including portable group term life insurance, short-term disability insurance, critical illness insurance, accident insurance, and hospital indemnity insurance, ensuring all policies are compliant with ACA guaranteed issue provisions and offer clear portability options upon termination of employment. Option C. Recommend offering voluntary identity theft protection and legal services plans, as these are niche benefits that can differentiate the company's offerings and are generally less regulated than traditional insurance products. Option D. Propose offering only voluntary life insurance and voluntary dental insurance, as these are commonly understood and require minimal administrative oversight, focusing on ensuring the life insurance is group term life. The correct answer is B. Recommend a comprehensive package including portable group term life insurance, short-term disability insurance, critical illness insurance, accident insurance, and hospital indemnity insurance, ensuring all policies are compliant with ACA guaranteed issue provisions and offer clear portability options upon termination of employment. Explanation: this scenario is professionally challenging because it requires a voluntary benefits specialist, VBS, to navigate the diverse needs of a workforce while adhering to the specific regulatory framework governing voluntary benefits in the United States. The challenge lies in accurately identifying and presenting benefit options that are not only appealing to employees, but also compliant with ERISA, ACA, and state-specific insurance regulation, particularly concerning portability and enrollment periods. A careful judgment is required to balance employee desire for comprehensive coverage with the employer's role as a facilitator and the legal obligations of the benefit providers. The correct approach involves a thorough understanding of the types of voluntary benefits that can be offered and their regulatory implications. This includes recognizing that while many voluntary benefits are employer-sponsored, they are employee-paid and must meet specific criteria to avoid being considered taxable income or misclassified as employer-provided benefits. Offering a diverse portfolio that includes critical illness, accident, and hospital indemnity insurance, alongside traditional options like life and disability, addresses a broader spectrum of employee financial protection needs. Crucially, ensuring these benefits are portable and that enrollment processes are transparent and compliant with ACA guidelines regarding guaranteed issue and special enrollment periods is paramount. This aligns with the VBS's ethical duty to provide accurate information and facilitate access to benefits that genuinely support employee well-being without creating undue compliance burdens. An incorrect approach would be to solely focus on benefits that are easily administered or have high perceived value without considering their regulatory standing. For instance, offering benefits that are not compliant with ACA mandates regarding pre-existing conditions or that do not clearly delineate between employer-sponsored and employee-paid components could lead to significant compliance issues for both the employer and the benefit providers. Another failure would be to overlook the importance of portability, leaving employees vulnerable if they leave their employment. Furthermore, misrepresenting the nature of the benefits, such as implying they are employer-funded when they are employee-paid, constitutes an ethical breach and potential regulatory violation. Failing to provide clear information about enrollment periods and the implications of missing them also undermines employee access and understanding, leading to potential dissatisfaction and compliance risks. Professional decision-making in such situations requires a systematic process. First, a VBS must identify the employer's objectives and the workforce demographics. Second, they must research and vet potential voluntary benefit providers, ensuring their products meet all federal and state regulatory requirements, including ERISA, ACA, and relevant state insurance laws. Third, the VBS should curate a selection of benefits that offer genuine value and address common employee financial protection gaps, prioritizing portability and clear enrollment procedures. Finally, transparent communication with both the employer and employees about the nature, cost, and limitations of each voluntary benefit is essential. Question 17. Strategic planning requires a voluntary benefits specialist, VBS, to develop a communication strategy for introducing a new suite of voluntary benefits to employees. The VBS is aware that some employees may have limited financial literacy and could be susceptible to enrolling in benefits that might strain their personal budgets. Which communication strategy best balances promoting the value of these benefits with ensuring employees make informed, financially sound decisions? Option A. Distributing a brochure that highlights the must-have aspects of the new voluntary benefits and includes testimonials from satisfied employees, with a disclaimer that employees are responsible for understanding the terms and conditions. Option B. Focusing the communication primarily on the attractive features and potential advantages of each voluntary benefit, with a brief mention of enrollment costs, assuming employees will conduct their own research if they have concerns. Option C. Presenting a comprehensive overview of each voluntary benefit, clearly detailing its features, costs, coverage limitations, and providing links to independent financial literacy resources, while also encouraging employees to assess their personal financial capacity before enrolling. Option D. Emphasizing that enrolling in these voluntary benefits is a proactive step towards comprehensive financial security and discouraging employees from seeking external financial advice, suggesting that the company's provided information is sufficient. The correct answer is C. Presenting a comprehensive overview of each voluntary benefit, clearly detailing its features, costs, coverage limitations, and providing links to independent financial literacy resources, while also encouraging employees to assess their personal financial capacity before enrolling. Explanation: this scenario is professionally challenging because it requires a voluntary benefits specialist, VBS, to navigate the delicate balance between promoting voluntary benefits and ensuring that employees fully understand the implications of their choices, particularly concerning potential financial strain. The VBS must act as a trusted advisor, not just a salesperson, adhering to ethical standards and regulatory requirements that emphasize transparency and client well-being. Careful judgment is required to avoid misrepresentation or overselling, which could lead to employee dissatisfaction and potential regulatory scrutiny. The correct approach involves proactively addressing potential financial concerns by providing clear, unbiased information about the costs and benefits of each voluntary option and offering resources for further financial education. This aligns with regulatory frameworks that mandate clear and accurate disclosure of product features, limitations, and costs. Ethically, it embodies the principle of acting in the best interest of the client by empowering them with the knowledge to make informed decisions that suit their financial circumstances. This approach fosters trust and long-term relationships, reinforcing the value of voluntary benefits as a supportive employee offering. An incorrect approach that focuses solely on highlighting the advantages of voluntary benefits without adequately discussing potential costs or financial implications fails to meet disclosure requirements. This can be construed as misleading or deceptive, violating regulations that prohibit misrepresentation. Ethically, it prioritizes sales over client welfare, potentially leading employees to enroll in benefits they cannot afford, causing financial hardship and undermining the intended purpose of voluntary benefits. Another incorrect approach that relies on generic, high-level information without tailoring it to the specific needs and potential financial situations of the employee audience is also problematic. While not overtly deceptive, it lacks the specificity required for informed consent and can be seen as a failure to provide adequate guidance. Regulations often require that information be presented in a manner that is understandable to the average consumer, and generic information may not achieve this. Ethically, it represents a missed opportunity to provide truly valuable advice and support. A third incorrect approach that discourages employees from seeking independent financial advice before enrolling in voluntary benefits is a significant ethical and potential regulatory failure. This behavior can be seen as an attempt to control the decision-making process and prevent employees from obtaining a balanced perspective, which is contrary to principles of consumer protection and fair dealing. The professional decision-making process for similar situations should involve a commitment to transparency, accuracy, and client centricity. A VBS should always prioritize educating employees about all aspects of voluntary benefits, including costs, limitations, and how they integrate with existing benefits. This includes providing clear, concise, and easily understandable materials and being prepared to answer detailed questions. Furthermore, encouraging employees to consider their personal financial situations and to seek advice from qualified financial professionals when necessary is a hallmark of ethical practice and robust regulatory compliance. Question 18. Regulatory review indicates that an employer with employees in multiple states is considering offering a suite of voluntary benefits including a group accident plan, a group critical illness plan, and a legal services plan. The employer's HR department has expressed concern about potential state-specific insurance regulations impacting these offerings. As a voluntary benefits specialist, what is the most prudent approach to ensure compliance with state laws? Option A. Rely solely on the representations made by the benefit vendors that their products are compliant with all applicable state laws, without independent verification. Option B. Advise the employer to only offer the legal services plan, as it is clearly not an insurance product, and to forego the accident and critical illness plans due to potential regulatory complexities. Option C. Proceed with offering all three benefits as they are designated voluntary, and therefore exempt from state insurance regulations, assuming the vendors have handled any necessary filings. Option D. Conduct a detailed review of each proposed voluntary benefit against the specific insurance laws and regulations of every state in which the employer has employees to determine if any are classified as insurance products requiring specific licensing, policy approval, or disclosures. Correct answer is C. Proceed with offering all three benefits as they are designated voluntary and therefore exempt from state insurance regulations, assuming the vendors have handled any necessary filings. Explanation: this scenario is professionally challenging because it requires a voluntary benefits specialist, VBS, to navigate the complexities of state-specific insurance regulations when designing and offering voluntary benefit plans. The core challenge lies in ensuring that the proposed benefits, while voluntary, do not inadvertently fall under the purview of state insurance laws that govern mandated benefits, licensing, or specific disclosure requirements. A failure to do so can lead to significant compliance issues, penalties, and reputational damage for both the employer and the VBS. Careful judgment is required to distinguish between true voluntary benefits and those that might be construed as insurance products requiring state approval or specific handling. The correct approach involves a thorough review of the proposed voluntary benefit offerings against the specific insurance laws of each state where the employer operates. This means identifying whether the benefit, by its nature and design, constitutes an insurance product under state law. For example, a critical illness plan or a short-term disability plan, even if offered voluntarily, might be regulated as insurance in certain states, requiring specific policy forms, carrier licensing, and disclosure. The VBS must consult with legal counsel or compliance experts familiar with each relevant state's insurance code to confirm the regulatory status of each benefit. This proactive due diligence ensures that the plans are structured and administered in full compliance with all applicable state laws, protecting all parties involved. An incorrect approach would be to assume that all benefits labeled voluntary are exempt from state insurance regulations. This assumption is flawed because state laws define what constitutes an insurance product, and this definition is not solely dependent on the employer's intent to offer it voluntarily. For instance, offering a group accident policy without verifying if it meets state insurance department requirements for policy approval and carrier licensing would be a significant regulatory failure. Similarly, failing to provide state-mandated disclosures for certain types of voluntary benefits, if they are deemed insurance products, would also be a violation. Another incorrect approach is to rely solely on the vendor's assertion that a product is voluntary and therefore compliant, without independent verification against state statutes. This abdicates the VBS's responsibility to ensure compliance. The professional decision-making process for similar situations should involve a systematic risk assessment. First, identify all proposed voluntary benefits. Second, for each benefit, determine the states in which the employer has employees. Third, research the insurance laws of each relevant state to ascertain if the proposed benefit is regulated as an insurance product. This research should involve consulting official state statutes, regulations, and guidance from state insurance departments, or engaging legal counsel specializing in insurance law. Fourth, if a benefit is deemed an insurance product, ensure that the carrier is properly licensed in that state, that the policy forms are approved, and that all required disclosures are made. Finally, document all compliance efforts and decisions. Question 19. Compliance review shows that a voluntary benefits specialist is evaluating several online enrollment platforms for a new suite of voluntary life insurance and critical illness products. The specialist is impressed by the modern user interface and the vendor's promise of streamlined administration. Which of the following approaches best ensures regulatory compliance for the selection of this platform? Option A. Proceed with the platform that offers the most advanced features for employee engagement, with the understanding that compliance will be addressed as a secondary concern after implementation. Option B. Rely on the vendor's marketing materials and general industry best practices to determine the platform's suitability for regulatory compliance. Option C. Select the platform with the most intuitive user interface and the lowest administrative fees, assuming the vendor's general compliance statements are sufficient. Option D. Prioritize selecting a platform that has undergone a thorough review by internal legal and compliance teams, specifically verifying its adherence to all applicable U.S. federal and state insurance regulations, including those related to disclosure, consent, and data security. The correct answer is D. Prioritize selecting a platform that has undergone a thorough review by internal legal and compliance teams, specifically verifying its adherence to all applicable U.S. federal and state insurance regulations, including those related to disclosure, consent, and data security. Explanation: this scenario is professionally challenging because it requires balancing the efficiency and accessibility of online enrollment platforms with the stringent regulatory requirements for consumer protection and data privacy. Voluntary benefits specialists must ensure that these platforms, while user-friendly, do not inadvertently lead to misrepresentations, omissions, or unauthorized data handling. Careful judgment is required to select and implement platforms that meet both business needs and legal obligations. The correct approach involves selecting an online enrollment platform that has undergone a thorough review by legal and compliance teams, specifically verifying its adherence to all applicable U.S. federal and state insurance regulations, including those related to disclosure, consent, and data security. This approach is right because it prioritizes regulatory compliance and consumer protection. Specifically, it ensures that the platform's design and functionality align with requirements such as those mandated by the Health Insurance Portability and Accountability Act, HIPAA, for protected health information, state insurance department regulations regarding policy solicitations and disclosures, and potentially the Employee Retirement Income Security Act, ERISA, for employer-sponsored plans. By involving legal and compliance, the specialist proactively mitigates risks of non-compliance, which can lead to significant penalties, reputational damage, and legal action. An incorrect approach would be to prioritize a platform solely based on its user interface and cost-effectiveness, without a comprehensive compliance review. This fails to address the critical need for regulatory adherence. Such an approach risks violating disclosure requirements, leading to potential misinterpretations by consumers about coverage details, benefits, or limitations. It also overlooks data security protocols, potentially exposing sensitive personal and health information to breaches, which would violate federal and state privacy laws. Another incorrect approach would be to assume that a platform's vendor's general compliance statements are sufficient without independent verification. While vendors may have internal compliance measures, the voluntary benefits specialist and their employer have a direct responsibility to ensure the platform meets the specific regulatory obligations relevant to their offerings and the jurisdictions in which they operate. Relying solely on vendor assurances without due diligence can lead to overlooking specific regulatory nuances or gaps in the vendor's compliance framework that could still result in violations for the specialist organization. The professional decision-making process for similar situations should involve a multi-stakeholder approach. For selecting or implementing any online enrollment platform, a voluntary benefits specialist should 1. Clearly define the regulatory landscape applicable to the voluntary benefits being offered and the target audience. 2. Engage legal and compliance departments early in the vendor selection process to establish clear compliance requirements for any platform. 3. Conduct thorough due diligence on potential platforms, including reviewing their data security measures, privacy policies, and how they handle disclosures and consent. 4. Obtain written assurances and, where possible, audit reports from vendors regarding their compliance with relevant U.S. regulations. 5. Ensure the platform's functionality supports accurate and transparent presentation of benefit information, preventing any form of misrepresentation. Question 20. System analysis indicates that an employee has requested tuition reimbursement for a master's degree program in a field that is tangentially related to their current role as a marketing coordinator. The employee expresses a strong desire to advance within the company into a more strategic marketing management position upon completion of the degree. The voluntary benefits specialist, VBS, must determine the appropriate course of action regarding this tuition reimbursement request, considering U.S. federal tax regulations governing educational assistance programs. Which of the following approaches best aligns with regulatory compliance and professional responsibility? Option A. Deny the reimbursement outright, as the program is not directly tied to the employee's current job duties and therefore does not qualify for tax advantage treatment under Section 127 of the Internal Revenue Code. Option B. Verify if the master's degree coursework directly relates to the employee's current responsibilities as a marketing coordinator or is required by the employer to maintain their current employment status, and if the reimbursement amount stays within the annual exclusion limit for qualified educational assistance programs. Option C. Advise the employee to seek reimbursement through a personal loan and suggest they explore external scholarship opportunities, as company tuition reimbursement programs are typically for more immediate skill development. Option D. Approve the reimbursement, as the employee's stated career aspirations align with potential future company needs, and the program is intended to support employee development. The correct answer is D. Approve the reimbursement, as the employee's stated career aspirations align with potential future company needs, and the program is intended to support employee development. Explanation. This scenario presents a professional challenge because the voluntary benefits specialist, VBS, must navigate the complexities of a tuition reimbursement program while ensuring compliance with both internal company policies and relevant U.S. federal regulations, specifically those pertaining to employee benefits and taxation. The VBS needs to balance the employer's desire to offer an attractive benefit with the legal requirements that govern how such benefits are administered and reported. The challenge lies in accurately interpreting and applying these regulations to a specific employee situation, ensuring fairness and avoiding potential penalties for non-compliance. The correct approach involves a thorough understanding of the IRS guidelines concerning educational assistance programs under Section 127 of the Internal Revenue Code. This approach prioritizes verifying that the employee's coursework directly relates to their current job responsibilities or is required for maintaining their current employment status, and that the employer's program is structured to meet the statutory requirements for tax advantage treatment. This ensures that the reimbursement is treated as a non-taxable fringe benefit for the employee, up to the annual limit, and that the employer adheres to reporting obligations. This aligns with the ethical duty to provide accurate information and administer benefits in accordance with the law, protecting both the employee and the employer. An incorrect approach that focuses solely on the employee's stated desire for career advancement, without verifying the direct job relevance of the education, fails to adhere to IRS regulations. This could lead to the reimbursement being considered taxable income for the employee, creating an unexpected tax liability and potential penalties for the employer if not properly reported. Another incorrect approach that disregards the annual exclusion limit for educational assistance programs by approving reimbursements that exceed the statutory maximum also results in the excess amount being taxable income. Furthermore, an approach that bypasses the need for proper documentation and program documentation, simply approving requests based on managerial discretion, risks non-compliance with IRS requirements for qualified educational assistance programs and could lead to audits and penalties. Professionals should employ a decision-making framework that begins with a clear understanding of the benefit's purpose and the governing regulations. This involves consulting relevant IRS publications, e.g., Publication 15B, Employer's Tax Guide to Fringe Benefits, and internal company policy documents. When faced with an employee request, the VBS should systematically verify eligibility criteria, ensuring the education's relevance to the current role and adherence to program limits. If ambiguity exists, seeking clarification from legal counsel or a tax advisor specializing in employee benefits is a crucial step before making a determination. This proactive and informed approach safeguards against regulatory violations and ensures the benefit is administered equitably and legally.